Most interactions with life insurance involve purchasing a piece of paper and putting it in a drawer and forgetting about it.
Almost anybody that loses somebody who didn't have their financial house in proper order is dealing with a headache post-death for potentially years.
If you don't have a definition of success, then your only metric is more. I want there to be no budget at all, no second thought on any expense related to.
Hey Hans, what's up, man? Welcome back. I'm at about 62 hours of an 80-hour fast. I just needed like a reset, man. Every time I eat, I'm bloated. Haven't been eating too
How's
great.
it going?
Instead of normally what you do is you try, like, the best way to go about this is you try to get fat adapted and eat like more keto and stuff and get your body used to but I decided to just jump right in feet first and figure out how to swim to shore with the carb loading I had been doing and the poor diet I've had recently. So I just figured I'd hop in, do a 3.5 day fast, and then roll back into a better diet. But it's going good. First day I was hungry. Yesterday pretty good. Today pretty good.
I'm a
Kind of ready
player.
to eat, but I'll break it at like 6 a.m. tomorrow because it
Well,
was like an impromptu thing. It was like I ate something late a couple days ago. So at 9 p.m. I decided I was like, I'm fasting for 3 days starting right now. And then the more I thought about, like, 9 p.m. is the worst time to probably break a fast. Like, you've done all this work and then you're going to eat right before bed, break the
yep.
fast. So I was like, well, I guess I'll just roll it until the morning. So it's going to be about 80 hours when I'm all done.
Wow, good for you. That's great. I mean, more like micro fasts, as in not eating between meals. But I do. I'm trying to work back into some version of intermittent fasting, just generally eating less. But that's good. That's good. Yeah, that's tough. But
Yeah, I'm setting some goals, man. I haven't seen abs in about probably since 2020. 2019 was the last time I was kind of trim. And time to get that. One of our 5 F's is fitness, right? And I've kind of let
yeah,
that go. I've been lifting weights and everything, but haven't focused too much on diet. So time to turn it around, man. I'm gonna crush it hard here for a while.
there you go. There you go. All right. Well, this is our first since recording since being in Phoenix. Last one that actually no, this is not. We've had one since then. But we're going to talk more about our Phoenix event. We're going to talk a little bit about the conversations that we had and review a little bit of Kyle from Factum Financial's material on the 4 stages of infinite banking. We said in our interview with Josh Rose that, as Kyle says, most interactions with life insurance involve purchasing a piece of paper and putting it in a drawer and forgetting about it, and then someone finding it and collecting funds on the inevitable passing of the insured, if the policy survives that long due to someone not canceling it or surrendering it. So that's most people's experience with life insurance. It's just a thing you have. It's a nice to have, and hopefully it's a good surprise that your wife didn't know about or something like that. It's a decision you made back in your 20s and then you forgot about it. It's just there's no intentionality, and it's going to end with one generation. As soon as that person gets the benefit check, likely if there's not other education in place, likely that money might be put to good use, but it's not going to last for generations. It's not built. It's not doing what we're intending to do with an infinite banking system. And so building through these 4 stages, getting the policy in place is the first step. We're trying to get to infinite banking mastery, which is step 4. So we're going to review some of that as we go through he's got
Yeah.
his workbook, but we're just going to kind of discuss.
And what's really cool about this, and I think that's really cool in the entire infinite banking community, is this idea actually came from another company who was once affiliated with NNI, no longer is, but they're doing some pretty good stuff. And somebody, like, over the years of looking at how people utilize their policies, how people move through the policies, kind of came up with this basic framework, taught it to Kyle. Kyle took it and adapted it with at Factum Financial, and then they kind of grew it into their practice and into the way that they were talking about things. Like, they set everything up as in a pyramid of, like, the full financial plan, if you will. And what's cool is, like, so then he taught it to us, and that's what I love about this community is all the sharing. And it's I think it's really brilliant the way that they broke it down, because it's absolutely true. When you start when you first get a policy that we design for the purpose of infinite banking, people think that they're doing infinite banking, but they're really not. They're like the first. So it's broken down into 4 stages. The first stage is the saver. Second stage is the wealth builder. Third stage is the business banker. And the fourth stage, the way they're breaking this down, is the infinite banker. And it really makes a lot of sense because when you come into this new paradigm of utilizing whole life insurance as a lifestyle, the first thing you're doing is capitalizing a policy. Nelson Nash talks about that. His common way of demonstrating that was like 4 years of capitalizing a policy. Now that's not necessary because with the large PUAs we can do and everything, you can start utilizing that policy right away. You don't necessarily have to sit and wait 4 years to capitalize it. But the first point of this is we want to take a percentage of our income and start saving it and saving it into an optimal environment, which whole life insurance is. So that's stage one. And what does that kind of cover?
Yeah, so the areas that they've got here: financial education, financial awareness, and a saving strategy. And so over the last couple years, we've put hundreds of policies in force. And if you're hopefully, if you're listening, you have one of those policies, whether through us or through another company that's vetted through NNI. But our goal, and we say it over and over, I say to every client, I want this to be the product in your financial arsenal that you understand the most, that you can explain to your wife, that you can explain to your coworker. You understand why we have a term rider, why we need that, why we have the policy structure we do. We've had this in-depth conversation. Our goal is financial education as we implement these strategies. But I would wager if we went to every single policyholder that are clients of ours and we said, hey, can you explain all these factors? I would say that probably, hopefully a small chunk, but probably a third or so, probably right now could not explain why they need a term rider, what their mech limit is, why we structured it the way we did. And people get excited. They see an illustration. They get excited about what this can do in the future for them. And then they pay their large premium, and then they just sit for a year. And if they're not using it, they're not interacting with it. If they're not listening to our podcast, continuing their education, maybe they forget. And so some of those conversations we have at the 1 year mark is, hey, why am I doing this again? And that's a common reset because we are focused on this day in and day out, but you have work, you have other lives, you have something outside of this, and this is not your primary, this is not top of mind for you the way it is for us. And so we're always here to refresh that education. But that kind of proves the fact that getting the policy does not make you proficient in all of these things. That's step one, and that is the saver. And so financial strategy, a saving strategy, and then just general financial awareness and education, understanding what we're doing and why at a basic level, not any kind of advanced tactics, anything like that. It's the foundational part is that education piece.
Yep, and depending on the time constraints today, we might even talk about, once you have that education, the next thing of that is your financial awareness. Like, so where do you sit now? What kind of saving strategy do you have? Do
Mm-hmm.
you know your daily burn rate? How much money you go through in a year? Are you comfortable with that? How much should you have in liquidity at a minimum on an emergency side? Because we always recommend this your first whole life policy or one of your whole life policies when you have a system should be set aside as an emergency fund. And above that emergency, all the
Mm-hmm.
additional funds in your entire system of policies can be utilized for either different things if you want to put them in certain buckets or opportunity funds. But first, it should be an emergency fund. So, are you aware of what you spend, what you save, where you save, what environments those are in? Is it speculative? Is it at risk? Does it have guarantees? All those things. So that comes with the financial education. Those two, I think, they kind of blend together. And finally, we put the savings strategy in place, which is your whole life insurance. And depending on the time constraints we have a little bit of here today on this recording, we might talk about like why it's the ideal place. We'll see if we get into that. If not, we'll record it for the next one. But like once you get to that point, so you've built some education, some awareness, you've put your saving strategy in place, which is the whole life insurance policy. At some point, you're going to move on to once that's capitalized, once that's flowing, once you've built the habit of saving there, you're going to flow into the wealth builder
Mm-hmm.
and kind of describe what that means.
Yeah, so we're going from on protect, our framework, protect, save, grow, that we always reference. We're starting at the basics with protection, and we're talking life protection right now. We're not talking about strategies to optimize other types of protection right now. It's just I don't wake up tomorrow, how does my family survive? That's the getting the protection in place. And like Ryan said, the emergency fund, the saving. So protect and save. Now we're going to start growing that in stage two, the wealth builder. And so we've added on top of this layer of financial education and a saving strategy. Now we have a debt strategy that we add on top of this because we're trying to redirect cash flow, and we're trying to figure out how we can take our current flow, like the dam, the cash comes in. Now we've built a dam, we're securing that cash or trying to, and now we're looking at the outflows and we want to evaluate this outflow can stay open. This one's not going to change. This one can be redirected over here to be more optimal. And then we also want to incorporate our investing strategy. So moving from that protection savings base to growth. And so this investing strategy element of it is pretty high up the pyramid, but it's something that you want to get going because we don't just want efficient savings. We don't just want adequate protection. We also want to continue to grow. And that's where you can kind of start taking these concepts of how do I leverage, for instance, my whole life policy in order to invest in something else. We're getting beyond just the baby steps of policies in place. One policy or part of this policy is earmarked as my emergency fund. The whole thing is the savings or the protection component, just the pure life insurance element of it. But now we're developing that. And that's where a lot of our clients, I would say, a few might get stuck on stage one. I've got it enforced. I've got a little bit of a background, but I'm not quite sure what to do with it. But most are at least at stage two, where they're actively using and implementing. They understand the policy loan mechanics. They understand being your own banker as far as using your policy to do some, more efficiently capture the things that are going to be, cash outflows or investments or lending that's going to happen anyways, doing it more efficiently through the policy. So they understand that. I'd say a lot of people are here at stage two where the debt strategy and the investing strategies start to come together on top of this whole life policy chassis. Like we're building up here.
Yeah, yeah, and it really just turns into that non-multiple uses of your dollar with the investing and even with the debt. So part of the debt strategy, if you get a lot of people will use this to pay off outside debts, and now those dollars are still being used in two places because it's being used as a saving strategy and it's being used in the repayment in the form of like your own personal kind of HELOC. So it really starts to accelerate things. So his third strategy is the business banker, they describe it, which is pretty neat. So this strategy starts to take more things into effect. So it starts to look at a lot of getting more like all of your cash flows going, expanding your banking system, and integrating a lot of the key components. Like some of those components are your insurance. How are we thinking about insurance? Life, health, disability, long-term care. Is that part of the product? Are they optimized for max efficiency? So now that you have a saving strategy, do you have all your deductibles, for example, raised as high as you possibly can on your home, your auto, all the different types of insurances you have to maximize inflows to your life? So by raising those deductibles, you're going to have a lower premium. Now we can divert those premiums into our saving strategy and start to have an entire flow. But there's a lot more involved in that. I don't want to take up everything. Yeah, so this starts to build the pyramid further. So that's still part of the base is just those little strategies. But what are some of the other integrations that we can have into our infinite banking system as we start to build up towards an infinite banker in this business banker kind of umbrella of the process?
Yeah, this is where you bring in cash flow management. We're really getting granular on cash flow, redirecting it, controlling it, and understanding where every dollar coming in and where every dollar is going out. So that I mentioned that on step two as well. But here we're really trying to coordinate all of that, and that's where these redirections come in. Like you said, with the property and casualty insurance, can you increase the cash flow by decreasing that monthly expense in a way, and that gets to a little bit more of not advanced strategy, but just kind of understanding the trade-off between monthly premium and deductible. How can you optimize that for cash flow? And one thing you'll notice in this, we're always talking about cash flow. We're not talking like nowhere on this really does net worth come in. Like we are really focusing on cash flow here because cash flow pays the bills, cash flow supports our life, and cash flow also optimizes our savings and net worth. If you get the cash flow piece right, that net worth will inherently go higher as you kind of move up this pyramid and start understanding these different elements of the comprehensive financial strategy. We also bring in asset protection here. We bring in our trust, and so we've got something worth protecting. we've got our lives that we have now protected. We've got our property that we've protected. We've got our health that we've protected. But we've also got these assets that we're growing. If we're optimizing our savings, we're optimizing our cash flow. When we get to those investment strategies, they're going to grow the balance sheet. And so we can protect those more efficiently by having those assets funded into a trust, by having proper asset protection in place. And so we're really starting to think beyond that. And I would say a large chunk of our audience or our clients are also at this stage too. We've set up a lot of people we've referred over to our partner Legacy Lock that we work with for getting these trusts set up. We've got, different, we don't do other types of insurance besides life insurance, but we have people that we can refer to, and we are very active in managing our own insurance bundle, I guess, outside of just the life insurance. But again, it's putting all these pieces in place together and integrating the components into a more comprehensive strategy. We're just getting more efficient here as the pieces come together. It's like you can't just get a policy in place and start saving and then really dial in on asset protection and cash flow management until you have the prior, the debt strategy, until you start getting some investments in something to protect. And so it's this just clean build of a strategy here. Once you get to this business banker stage, you're treating your cash flow as a family like a business. In your policy, we refer to as a business a lot. You're starting a business with fixed expenses, guaranteed growth, guaranteed profitability, and guaranteed multiplication eventually back into the family. That family business is something that we're now looking at comprehensively beyond just one policy, beyond just one savings vehicle, beyond just one investment. We're bringing it all together now at the business banker stage.
Yeah, and I think the a big important part of this is the synergistic effect of like somewhere in the wealth builder stage, you started using your whole life policy to move into some investing strategies, whatever those are that you like, whatever fits your investor DNA. But now, how is that investing strategy playing back into the entire system? So now these things are all tying together at that point. Early on, your investing strategy is just probably producing you some profit. And maybe you're flowing it back into your policy like you should, but now it's starting to work with all of those other pieces together. So this is kind of like this is probably the point at which most people truly stop if they get this far. A lot of people are just going to, and these stages that we're talking about, saver, wealth builder, business banker, infinite banker, some people stay in the saver stage forever. Other people are going to move on into the wealth builder and start using it to invest. Some people are going to get here to this business banker stage 3. And I think this is probably really, if you think about the whole process, where most people stop. But if they don't stop, they're going to go to stage 4, which is what we really want, which is the infinite banker. And that's where you have maximum control of your entire financial life. So this is where you kind of hit the financial freedom point, and you're now thinking about a family banking structure. Like Jason Lowe, he's kind of been the guy at the top of this with Ascendant Financial. They're out of Canada and they're actually now in the United States too. But his family banking system is massive. They've got like 77 policies, I think, in their family, and nobody in their family finances anything through a bank anymore, including brothers, uncles, nieces, nephews, you name it. Like they've hit that peak of family, a true family banking system where the kids know what's happening, the next kids are going to know what's happening, and it just continues and continues. So that builds into that like multi-generational legacy. This is the stage we want to get to that I think a lot of people don't get to. And part of the problem in the TikTok world is that an infinite banking policy is often looked at as a tool and a gimmick to further your returns, and that's the extent of it.
Yeah.
So nobody really gets here, and I think that yeah, this is the pinnacle. This is what we want for our families when we're really thinking legacy. Like we can do all those things. We're going to use it as a tool when we're a business banker, even when we're in the wealth builder stage. But that's the end of most things you see out there anywhere, as far as YouTube, TikTok, most of the information, a lot of the podcasts, that's where it ends. This is
Yeah.
the goal. This is true infinite banking, where all of your money, or as much of your money as possible, is flowing through a system that benefits a whole bunch of people.
The something that Kyle said at the event several times, because it's applicable in different elements of this conversation, was if you don't have a definition of success, then your only metric is more. And so if you're using infinite banking, if you watch a TikTok video and you're going to you're gonna get rich by buying cars, if you're gonna do all these like circular things where it goes to the trust here and then it flows out here and you get to capture a little bit of tax efficiency here and you put that in the market and you grow it. Like if you're just thinking about optimizing rate of return with your policy, you don't have a top of the pyramid here. If you look at the pyramid here, the freedom, that's those 5 areas of life, those 5 Fs, as we call them, or as Kyle, let me actually find it.
Yeah,
But
yeah. I'll pick it up, Kyle. Like this is one of the cool things about I'm so grateful for like our friendship with them and the way we've connected over these last few years. Like we run parallel in so many ways. We think like we talk about the 5 Fs in our business: the faith, family, fitness, finance, and friendship. And on theirs, they've got their 5 areas of life. They just name them differently, but you can really see how they're completely linked. They've got the spiritual side, the personal side, family, financial, and occupation. So,
yeah,
and, you know, occupation for them is just almost going to cover like the friendship side because when we talk friendship, that's community. That's what we do. That's who we talk to. It's not just like your buddy that you get together and have a cigar with once a year. It's like the friendship is the community and what we're doing right here is friendship and the people we meet, the things we do. So it's super cool how in tune we were with with the same way that they think and their ideals within their business. Go ahead.
this is where you need to really like, this is forward thinking. This is thinking beyond, and what we have to snap people out of always when we first start introducing this concept is thinking about the next 3 years, anchoring on the next couple years. Again, that gets back to thinking about returns. Like we're starting a business here, and we're not only starting a business that's going to be efficient for ourselves, we're setting up our family with a generational legacy. We're thinking long term here. And so, yes, we're using these policies now. Yes, we're growing them. Yes, we're leveraging. We're doing all these things that people initially get on our calendar for. No one gets on our calendar to talk about base premium and a standard whole life policy that's just going to benefit the wife one day. Like no one's excited about that, and that's why the whole life product has a bad name, just because no one thinks much about it. No one's intentional with it, other than if you're not, you should have that. If you don't have anything else, just making sure you have that protection in place. Like that is valuable, but that's not why people are on our calendar. People are on our calendar to talk about policy loans and how do I use this and how do I grow this now and what can I do to make what I'm doing more efficient. And that is kind of the whole thing behind becoming your own banker. That's most of the conversation. But we want to really focus and anchor on this future goal of freedom in those 5 areas, whether you use Kyle's framework or our 5 Fs. But it's good to have this exercise with yourself where you sit down and say, what do I actually want? And don't be afraid to say what you want in monetary terms. Like I think we have this idea that, all right, what are my goals? What are my dreams here? What am I trying to achieve with this family banking system? And people want to say, well, I don't want to have like these material goals. They have to be, it has just to be like a fulfilled life. I think this is an area like finance is one of those places. And so get comfortable with just setting up what those goals are. And one thing that I said when we kind of walked through that at this event was, if I'm thinking of two finance related goals that I have, two of them that I mentioned are, I want there to be no budget at all, no second thought on any expense related to health, longevity, anything like that. So whether it's like supplements or appointments with the right kind of doctor or naturopath, whatever, anything that's contributing to family health, I don't want there to be any budget for that. I try to make that our position right now, but I'm like, wait, run that by me real quick. What are we doing here? Like I still have a little bit of a back, a break check on that, just to make sure we're not getting, because that stuff is expensive, right? We're getting Kevin Munoz regeneratively grown beef is way more expensive than I can get bulk beef at Costco. Like I'm not making a financially smart choice there. If my only metric is more, i.e., more money left over after I purchase meat, I would go to Costco and get the bulk beef. But I don't. I go to Kevin and I pay a lot more for the best, highest quality. And so I want to have that goal, like the best groceries, the best food, the best in anything for health. I want that to be zero consideration for budget. You want it, you can justify it, why we need this, you get it. That's a goal I'm striving for, and that's a financial goal. It improves on the personal and the family side, improves lives, but that is primarily like I need to get through these stages to where that is financially feasible. The other one was slow travel. I want to be able to go to Japan for 6 months and just live there for a little while rather than just getting a hotel and bouncing around for 2 weeks and a couple days here, a couple days there. Go to Europe and just spend a year there, or however, whatever it looks like. I want to be able to do that and just have these trips that we don't want these to be retirement trips down the road that happen one day when the kids are out of the house and we can just do a trip alone. Like I want to take the family, and I grew up in Europe for a good chunk of my childhood. Some of the like some amazing memories of traveling around and stuff that is unique in the typical American experience. I want my daughters to get to do that when they're young, not just as something that they do or that my wife and I do when we're older. And so I have a goal to where the finances are in a position where that's totally sustainable and doable. And so it's worth thinking through in these different areas. Those are just two examples that I have on my finance side of things that we want to work towards. Like think at the top of the pyramid. Think when I am mastering infinite banking, when I am at this stage 4, what will life look like in all of these areas? That gives you a metric to strive for. That's not just more dollars, because that's never in reach. That's always going to be that rabbit at the dog track is always going to be ahead of you if more is the only metric. You have to have something definable, and that can be financially definable goals as well when you're talking about your financial area of the 5 areas.
Well, and I think the financial side, like I'd make the argument that faith and family is more important than any of the other three, but you can't live in abundance in all the 5 areas unless you also have abundance financially. It's
Yeah.
impossible to, if I'm constantly having to earn, work, go, 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 how can I be fully present with my family? How can I be fully present in my faith? How can I carve out the time to do all those other things, to pay for the best stuff on fitness side, to have good mental health space, to have, good physical fitness, to spend the times that the things I want to do in my community with my friends and all that stuff. So it's such a key. The thing about this is it touches all of them.
Hmm.
I can maybe be broke and have but I'm probably always going to be stressed, so it's going to impact family. So the stress in all the other areas of your life is going to probably decrease when you reach that financial independence and you reach those goals. That's
And
why I think it's somewhat faith should be central in your life, but in some ways finance is going to spread across everything. You cannot operate in this world without good financial security, without a good savings habit, without future wealth and wealth preservation. And you can help your family and your children have more influence and significance in their lives by building and making sure they understand the family banking system and the legacy that they're going to receive without being trust fund babies, silver spoon babies, but actually being a part of what you're building.
yeah. And of course, if your goal is a simple, quiet life and you just need the food you grow on a quiet farm, like you don't need this financial area for you doesn't need to be having a ton of money to facilitate these large expenses. Like for me, that what I mentioned, those are large expenses that I want to be able to easily fund. Those don't have, I mean, your goals don't have to be outlandish or anything like that relative to
No.
where you are today. They could be a simple quiet life where we just eat our own food that we grow on the farm and whatever, but we still, like, if that's your goal on the finance side, think through, how do I have a farm that's paid off? How do I make sure I have enough cash flow to cover my property tax, or the things that are still going to like, you still need to address finances. You can't just be hands free in our society. Like you just can't be hands free and I own everything outright that I have, and I don't need anything. Like I don't depend for anything. I mean, that is a worthy goal, but you still need to get a lot of loose ends tied up financially even to get there. And so just be honest with yourself and be aggressive, be generous in what you actually want on these areas, because again, having something to strive for is critical to ever reaching this point, because you have to define the end. You have to define, you can't know if you've gotten somewhere if you don't know exactly where that is and how you're going to define that success.
And I would say that most people who think about these things and or, or who don't think about these things, but they just they're just living for like that basic idea without getting this part of their life in order, are only going to leave disorder for the next generation. Even if you're living well and you're happy and you're like, hey, I've got enough money coming in, I'm happy and content where I am. Without paying some attention to this, without thinking about that intergenerational or multi-generational legacy you're going to leave, you're going to leave a headache. Almost anybody that loses somebody who didn't have their financial house in proper order is dealing with a headache post death for potentially years. So it's not always just about the money side of it. It's also about how are you impacting your family when you don't take control of this area of your life. And it can be
Yeah.
pretty negative.
Yeah, it's a great framework that just these four stages and working your way up this pyramid to make sure you're not missing anything, to think through all these elements of it. There's different models that we've looked at and some that we've went over with clients, and this one I've found to just be the simplest and just kind of the most natural progression as you go. So if you you probably can identify generally what stage you're on in that. Like I could put clients in stage one who have policies but don't quite understand them. I hope they understand them, but they don't fully grasp the bigger picture. It's a start. They're on step one in stage one here. But I think we do have a lot that are on stages 2 and 3. You know where you are, but think through where you want to actually go. And then there always know like you keep improving, you keep growing on this foundation. And the more your system expands, the more you use that investment strategy, that growth pillar to expand the overall system, the more you have room to optimize. It's like more money, more problems in a sense. Like you can take that expanded pool of capital that you're growing and you want to redirect those flows and take a look back at go back down the pyramid. Okay, now that I've got more capital coming in, where can I optimize? Where can I optimize here? Where can I optimize on my disability insurance, my health insurance? These different elements that you kind of get buttoned up for the level that you're at, but don't stop revising the plan and bring yourself down a rung on the pyramid. Check everything now with my new situation with updated inputs. Are these the right outputs? Make those changes and continue to always be striving for that goal. But defining those goals is critical.
Yep. So, little quick recap: four stages of infinite banking. Stage one is the saver. Stage two is the wealth builder. Stage three is when you are a business banker. And each one of these is an increase in control, by the way, control of your entire financial life. Stage four, finally, is the infinite banker. And that's somebody that has achieved true financial freedom, flowing all their money properly, has the ability to live in abundance in all five areas of their lives because this side of their life is tied up and no longer a stress. Yeah, it's an awesome framework, man, and it's something we're going to build into more and more things that we talk about and more content that we're creating and some changes we have coming up here as far as how we do some things. So it was really exciting to go through that in depth and learn some more. And I'm, we're like I said, we're blessed to be friends with the folks over at at Factum Financial. Awesome folks. Grateful for the fact that they let us, into their world and teach us some of the things that they're doing. And it's a great way to learn.
Yeah, it is. And this contrast this with other approaches. The conventional approach to money. I'm not gonna say traditional because tradition is what we're doing.
Typical. I think typical.
Typical is a better word. Yeah. And contrast this. Do you want to be buying bulk Costco beef and eating rice and beans in order to save more for the future for all these things you want to do, but not till you're 65? I don't want to do that. I don't like budgeting. I like tracking and knowing where the money's going, and I like eliminating unnecessary outflows. But I don't like budgeting. I don't like just that mentality of scarcity. I'd rather make more, and I pay to develop my skills in order to do that. And I think everyone should be doing that compared to the typical financial planning model. It's this no control, no thoughts for right now, no thoughts on cash flow, how we can, slow travel is not built into the conventional financial plan, into that model. Like that's a down the road thing. And in the meantime, for the next 30 years, you just set it and forget it and hope everything works out. So this is abundance now. It's being smart now. It's not squandering money. It's not just spending because we're living in the moment. But it's putting these pieces in place that allow us to live in abundance now. And then on the scale of what's possible down the road, it's not just I want $3 million nest egg so that I can pull 4% off so that I can live on my current salary when I'm retired. Like that's not a goal. That's not. I mean, I guess it could be, but that's not fulfilling. It's like when I look at these areas, like I have a very specific across these categories, like specific things I'm targeting. I know when I've reached them. I will know when I'll reach them, and I can get there much sooner than 65. And so this is a great framework for optimizing now, living in abundance now, and having an overly abundant future, not just for you, but for the future generations, for your children. Like we're doing this for them. That's what matters.
So you can have more significance and influence on those you love and the people that surround you, and hopefully other families around you. Become a mentor family. As you learn this, you can start becoming a mentor family for others and showing them how you're living in abundance. It's a beautiful thing. You got anything else to add?
No, that's a short one, our shortest one ever, maybe.
It might be. But hey, if you like this, we'd appreciate it if you would like, subscribe, share this with your friends. It helps us, helps other people, and we appreciate you listening. All right, brother.
Yeah. Cheers.
Talk to you soon. Thanks for listening to Remnant Finance. If you found any value at all in this episode, please subscribe, leave a review, and share it with a friend.
Remember, true financial freedom comes from taking control of your personal economy and breaking free from the status quo. So stop being a passenger in your family's financial future.
Boldly take back control of your wealth. Until next time,
This is Brian and Hans signing off.